How's it going, traders? Richard here, and in this video I'm going to discuss another variation of the zigzag patterns that I've shown you guys during previous videos. As you remember, I've done the zigzag pattern. I'm going to be showing you in just a short while a quick recap of those two that I covered. The single zigzag, or ABCs as some might call it, as well as the double zigzag, which is a bit more of a complex formation, similar to the single zigzag, but two zigzags after each other. Right, so this is going to be the actual second variation of the zigzag pattern. Again, a very simple pattern, but it does display very distinct features. That's different from the single zigzag or the double zigzag. But before we look at that, there's actually one that did materialize here on the Euro US dollar pretty recently. Let's quickly have a recap of the single zigzag. So let's, for example, use a downtrend as an example. Right, let's say price moves lower, and then you get a corrective pattern. First move up, creates a higher low, and then a higher high above that previous high over there, and then price continues lower, giving you that zigzag pattern. Again, if you want to go and label that, it's typically called an A, B, and a C, and then you get a trend continuation. All right, so just a very, very simple correction, again called a single zigzag. Now, with this pattern, as I discussed before, the third wave, or that C wave, typically travels the same distance as the A wave. That's a very, very distinct characteristic of the single zigzag. All right, let me just get that off the screen, and then quick as a recap, the double zigzag, which was very similar to the single zigzag, but two after each other. So we have an A, a B, a C. Then we have that one leg down, in this case during a bearish trend, followed by another A, B, C. So two zigzags, then you get a trend continuation to the downside. All right, and this was labeled a WXY wave. And if we quickly want to recap that again, if you did not go check that previous videos, it's basically an A, B, C, followed by another A, B, C. And you got this one wave over here that basically joins the two zigzags together. Just make that a bit thicker. And then the entire thing, let's make it a little bit more thicker. The entire thing, if you want to go and call that or do that, it's typically labeled a W, X, and a Y. WXY pattern, or you can just call it a double zigzag. All right. Now, the third variation we're going to look at today, again, also very distinct features that is typical of this correction or variation of the single zigzag, is a expanded flat. Now, there's reasons why it's called that particular name, and I'll quickly go through that over here. Let's say, for example, again in a downtrend, you then get a move up. Now, where you have that first move up, or the A wave of a single zigzag, your B wave typically travels towards where the correction started from. But instead of actually moving way lower or actually having a trend continuation, it generally stops in line with where the correction started from. Then all of a sudden, price shoots back up, and it's typically during that move to the upside that you see a very fast acceleration. That is one of the characteristics of a expanded flat, is this very fast movement. And what's also different from the expanded flat is that that third wave is also typically much longer than that first A wave. If you remember the single zigzags, your C wave typically has the same sort of range as your A wave, right? But in this case, it typically travels much further. Price then finds support or resistance depending what direction the correction is moving in, and then you get a move in the opposite direction. All right, so something that generally gives this pattern away, and again, assuming that you're thinking if price is moving opposite to the trend that you're following, I always assume, my personal self, is that I'm dealing with a correction. And generally, first in ABC or single zigzag, and if that then morphs into something else, then potentially a double zigzag. All right, so always try to figure out what is the market currently doing and trying to figure out how I can use that information to my advantage. Again, with the double zigzag, what typically gives that away is this formation over here, right? You just get that one leg up, and instead of a trend continuation, price either makes a double bottom or double top, depending what direction this correction is moving in, or it slightly extends a little bit low from where the correction starts from. Then you get this very strong, typically volatile, aggressive move in the opposite direction. And when that happens, you typically, I wouldn't say 100% no, but you should potentially think that you're dealing with an expanded flat. All right. So that behavior that typically gives it away prior to this wave actually happening is when price actually falls short or just extends slightly below or above the start point of that correction. And then you get that strong aggressive move. All right. So that is the typical characteristics or behavior of an expanded flat. As you can see here, it's actually been one pretty recently here on the euros dollar. Again, this can happen on any time frame and in any market, right? This just so happens to be on a 5-minute time frame, and we can clearly see here our price moved lower. Let me just get rid of that magnet mode, and then it moved higher. Instead of making continuation or doing this like a typical zigzag would do, let me just do that quickly. We had price actually form a double bottom with that previous low over here. That's one of those characteristics I've talked about. And see this long ranging bar back upwards. A very, very aggressive move back upwards again. Just typical behavior of an expanded flat. Now, before we look at the symmetry or the ranges that your C wave typically travels, because it is longer than your A wave, it does tend to end at specific expansion ratios using a Fibonacci expansion tool. Another thing here is that typically when they end these patterns, they just as fast as they began, they typically end also very abruptly, and you also have pretty aggressive move back in the opposite direction, in this case, a trend continuation. All right, so same thing. Let me just get rid of those drawings. Let me just open that up a little bit more. Same thing with this, also just labeled an ABC. It's also a single zigzag pattern, but just different behavior. C wave, typically longer than your A wave. Also just labeled an A, a B, and a C. All right, let's get rid of that. And then I'll quickly look at the underlying ranges that this particular pattern, the expanded flat, typically displays. And you can do that by using your Fib extension tool. And what you'll do, similar to what I did with the ABC, you have a starting point of the correction, that first A wave, B wave in this case, travels almost, well, towards where the first correction started from. And with expanded flats, keep an eye on 138.2, typically the 161.8 level, or as on this platform, it's called a 1.618. Very aggressive move, so much further distance that the C wave actually travels. All right, so you quite often will see a very fast trending or aggressive, volatile move into the 138.2 or 178.2 levels, where exactly actually price actually met all of these levels and eventually turned around, and he had a massive and very fast moving change in direction or trend continuation again to the downside. All right, so that was the double zigzag. It's actually the final variation of the zigzag patterns. Again, just a quick recap, we looked at the ABC or the single zigzag. We then looked at the more complex version, the double zigzag, and this was your expanded flat. So those are the characteristics that this pattern tends to behave. Then again, just looking or following the information I gave you, if you think you're dealing with a correction, either a zigzag, double zigzag, or expanded flat, then these are the tools you can use to go identify those zones where those corrections potentially might end and reverse from, and that might potentially give you an advantage, this information, to then formulate a plan to get into a trade and make use of the information. Again, thanks very much for watching. I'll see you in the next one. Take care and goodbye.